All right, let's get started. Maybe some people will trickle on in. If that happens, awesome. If not, oh well, their loss. Like I said before, this is going to be recorded, so if you want to send it to people, let me know, and I'll be able to hook you up with a copy of the recording. Well, good afternoon, everybody. Thanks for tuning in today. I greatly appreciate it. Hope you're excited to learn more about life insurance and the power it can have on your financial livelihood. I know I blocked off an hour time for this presentation. It's definitely not going to take that long. Before we get into this, I wanted to let you know a little bit about myself. Here's my contact information. You'll see this again at the end of the presentation. Just so you're aware, I've been in this financial services industry for about 6 years. I have I've been in it in various positions. I've worked at US Bank, a couple other banks. I've been in equity research as well. So I have various experience in the financial services industry. I have a bachelor's degree in economics from the University of Minnesota and an MBA degree in finance from the University of St. Thomas. And a little fun fact about me, I love to play tennis. So if anyone wants to play, I am all game. All right, life insurance is an extremely versatile tool. It can be used for many situations and can help solve many problems. Well, what is life insurance? Essentially, life insurance provides money to help make sure that people you love and care about can carry on financially, even if you're not there. It guarantees that money will be there when it's needed most. It can assist with financial obligations, which don't stop with a death, by helping to pay for immediate and ongoing expenses. It's a versatile and powerful financial instrument that can solve many financial problems and is an important component of a sound financial strategy. Now, its proceeds can be used to meet current and future financial obligations, such as final expenses, debts, ongoing living expenses, and education funding. Now, there are some groups that typically need life insurance, and the four that I'm really going to address today are families, seniors, small businesses, and large estates. There are others, but these are, like I said, these are the groups I'm going to be addressing more in depth today. So in other words, if you have dependents or a business that will suffer financially when you die, you probably need life insurance. First, going to go through families a bit more. Now, for families, the life insurance needs might include such things as debts, income continuation, which is exactly what it sounds like. If you die, life insurance can replace your income to make sure that your family can continue to function financially. Mortgage payments are among a family's largest debt. A life insurance policy can either assist with payments or pay off a mortgage. If you're renting, then the coverage can help make sure that the rent is paid as well. Education. Parents typically want to provide higher education expenses, at least to some degree, for their children. And life insurance can definitely help provide the funds to do that. And then finally, families that have children with special needs. I'll dig into a little bit on how life insurance can help with that as well. Again, these are just some of the major needs of families. There can be more, but these are the most common. So I'm going to dive in a little bit deeper to these topics briefly. Debts, for instance, obviously, what young family doesn't have debt? This could be credit card debt, student loans, perhaps hospital bills after giving birth. When you pass away, your debts don't just go away. Creditors still want to get paid for the money you owe them. And you don't want to leave debt to loved ones to have to pay off. And believe me, they definitely don't want to pay it off for you either. Why make your loved ones pay that debt when you can use life insurance to do so? income continuation. Like I said before, if you die, life insurance can replace your income to make sure that your family can continue to function properly, or function financially. Properly, maybe not, but financially they'll be able to function. Your spouse may rely on your income to make ends meet. Not many people understand how much capital it takes to generate a livable amount of income for a family. So for example, suppose you had $1 million death benefit from your life insurance policy. If your spouse wanted to use that to create an income stream over the next 20 years, that's only about $50,000 per year, which may be very different than what you're living off of currently. Now that assumes your spouse doesn't earn any return on the $1 million, not to mention the effect that inflation plays over those 20 years. The point is, you likely need more insurance than you think. A good rule of thumb is to get anywhere between 10 and 20 times your annual income. Let's talk about mortgage and rent now. Most people want their spouse and family to stay in the family home, but what if they can't afford the house payments? What about upkeep? You know, a new roof, siding, windows, real estate taxes, and so forth. Owning a home is expensive. Having life insurance to help pay off the debt and keep the house in good repair is a critical reason to have life insurance for your family. And here we'll talk about education needs. Like I said before, higher education is expensive. Trust me, my MBA degree was not cheap from St. Thomas. Realistically, most of us, unless you're really wealthy or you get scholarships, can't put your kids through college on your own. And if your kids lose a loved one as they're growing up, wouldn't it be great to at least give them the advantage of having their college paid for? This can prevent them from the burdens of student loans and help them get the education they want for the career that's right for them. And finally, families that have children with special needs. Those families understand the cost and commitment it takes to raise them. They pretty much have to be with their children 24/7. And it costs money to care for them, whether it be doctor's visits, therapy, special equipment, home modifications, schooling, etc. The child or children will need care for the rest of their lives. And if the parents are no longer alive, then the question is, who's going to pay for their care? Having life insurance as a mechanism to help pay for those costs can ensure that children get the care they need for as long as they need it. All right, so that's the spiel so far on families. I'm going to shift gears to the next group of people, which are seniors. Now, seniors, you have your own set of life insurance needs that take into consideration your stage of life. Life insurance can provide some liquidity or cash that is ready and on hand, so you don't need to immediately tap into such things like investments. It can help cover final expenses such as funeral costs, and it can also be helpful in taking care of settlement costs. Now we know that when a spouse dies, Social Security benefits are cut. Life insurance can help make up the difference. The same goes for pension maximization. Life insurance can help make up the difference if you choose a higher pension amount that ceases to exist with your spouse's death. Frequently, there are hospital debts associated with an individual's final days. Of course, there are taxes, estate preservation. This allows you to use life insurance to help with the transfer of your estate. Estate funding, which perhaps you'd like to guarantee that funds are available to send a grandchild to college or something else. And then finally, estate equalization, which helps make sure that all family members get a fair price of your, a fair piece of your estate. It's pretty amazing, isn't it? Life insurance can definitely help you do all of this. But wait, there's more. I'm going to address the benefits to you business owners now out there. Different thoughts. A lot of people don't realize the benefits that business owners can get and take from life insurance. So for instance, key employee coverage. Life insurance helps protect a business, its employees, suppliers, customers, creditors against the economic loss of resulting from the death of a key employee whose skills or talents are vital to the success and stability of your business. The business entity itself will be the owner and beneficiary of the life insurance policy. This is for you business owners that have someone special working for you. If you were to lose them, the business would suffer. Offset those losses with life insurance. This allows the business the time to hire and train a replacement. Next thing is executive bonuses. Now, employer paid life insurance helps attract, reward, and retain important personnel, often top management. Finding good talent is a challenge for you business owners. I can definitely understand that. Once you find them, you definitely don't want to lose them. One great way to retain the employee is to pay them a bonus. Instead of giving them the cash bonus and see them walk away, put the funds in a life insurance policy that the employee owns. If the employee wants to keep the policy alive or active, then they will stick around to ensure the bonus gets paid each year. And then for business continuation planning, life insurance provides the money to execute a buy-sell agreement upon the death of an owner or a business partner. I'm sure most of you business owners probably don't want to go into business with your partner's spouse, as awesome as they really might be. And if there is a life insurance policy owned between the partners, then the surviving partner can use the proceeds to buy out the deceased partner's shares. This allows the surviving spouse to get the buyout they need for their family, and it allows the surviving owner to move forward with the business as they see fit. Definitely a win-win there. Then loan protection. Life insurance provides benefits to help pay off loans. Most banks require you business owners to sign personal guarantees on business loans. And that means that if the business can't pay off the loan, then the bank looks to you as the owner to pay it. Now, if you die, what's the chance that the business can pay off the loan? Probably not very good, which means the bank is coming after your estate for repayment. Having life insurance can help make sure this never happens. And then this fourth group we're going to talk about, large estates. Now, if you're really wealthy, then there's a chance you will owe estate taxes. Estate taxes are currently about 40% on the amount of assets over around $5.5 million per person. So if you have assets over that amount, then you should do some planning to limit the taxes you pay. If you will owe estate taxes, what better way to pay for them than life insurance? It gives you the cash you need when you need it. You won't owe the taxes until you die, so life insurance pays at the perfect time. Additionally, it's tax-free, so you don't have to worry about income taxes eating away at the death benefit. For example, if the death benefit was $1 million for your heirs, be that children or whomever, they'll get the $1 million. And if you think you're going to owe estate taxes, why pay for them dollar for dollar? Leverage your life insurance premiums to pay the taxes so your heirs don't have to cash in assets to pay for them. Life insurance can also be a good way to leave something for a cause that you love. If you have an old policy that you don't think you need anymore, then you can change the beneficiary to a charity. You won't get any current tax deduction by doing this, but you'll know that the charity gets a nice benefit upon your death. Or if you've been supporting a charitable cause and you want to leave a larger gift, assuming you meet the underwriting requirements, then life insurance can be the means of doing that. Death benefit proceeds from a life insurance policy are generally not included in the gross income of the taxpayer or beneficiary. There are certain exceptions to this general rule, including policies that were transferred for valuable consideration. Now, by all means, this information that I'm sharing with you about taxes and everything should not be construed as tax or legal advice. So definitely consult with your CPA or lawyer or both for details and guidelines specific to your situation. Now, coming down the wire here, how much life insurance do you need? In basic terms, the amount of life insurance you need is determined by considering your current and future obligations and taking out your existing resources from that amount. Fortunately, there are many good calculators online that'll do that for you, like the ones on mutualofomaha.com, or we can meet one-on-one and determine that amount for you. And types of life insurance. Now, it really boils down to two types of life insurance. Both are excellent choices, and it all depends on which of them best suits your needs. So let's go through the differences. First, I'll talk about term life insurance. Term life insurance provides protection for a specific period of time, or a term, typically 10, 20, 30 years. Those are very common terms that you see on life insurance policies. It provides a death benefit only, so there's only going to be money paid out if you pass away. It has a lower initial premium than permanent life insurance, and its premiums increase as you get older. So as you get older, after that chunk of time, that term, it's going to be more expensive in the next term. Now, the characteristics of permanent life insurance include that it provides lifelong protection with level or equal premium payments. So premiums will never get larger. It provides a death benefit as well as the ability to borrow off of the accumulated cash value in the policy. And it can allow for some flexibility as far as premiums go. As we get here, there are many benefits to life insurance, and depending on your state, there are several benefits that you can access while you're still alive. This could be a beneficial addition to your financial strategy, which I can help you put together. And this would be something we would have to determine together, and definitely on a case-by-case basis. But that is something that is good to know, that you can access some of the benefits while you're still alive. Now, what all this really boils down to is included in these key questions. And now, before you consider a life insurance policy or anything, you really have to consider each one of these. First, and it's in no specific order, but how much life insurance do you need? Is the need temporary or long-term? As in, is it just going to be for a little bit, or is this a need for a very, very, very long time? How much life insurance can you qualify for? I'm going to come back to that word qualify. I had some people reach out to me and ask questions about qualifying, and what does that mean? How long will you need coverage? Are you interested in cash accumulation? I'll also talk about that too. And then how much will your budget allow? So those are some questions that should really be asked and thought about as you're pursuing and looking at different life insurance policies and options for yourself. And now with that, I wanted to open up the floor for some questions, if anybody has any. I do have some that people reached out to me beforehand. So I have a couple of prepared questions. I'm watching the chat box on my iPad over there. So if anyone wants a question answered, go ahead and ask it there. I will go ahead and ask and answer some of the questions that I received earlier. One was, why would a young single professional with no dependents need life insurance? And that is a great question. And the reason why that's a great question is because, maybe the need isn't really there. A lot of times it comes down to how would life insurance benefit a young single professional person? That really comes down to something that I was talking about as the cash accumulation, which was another question. Someone asked, what did I mean by cash accumulation? And that really, there's always options in that permanent life insurance. It works out to be a point where you are able to, you pay the premiums you pay from month to month, a portion of that will pay for the life insurance. But the rest of that premium gets put aside into, for lack of a better term, a cash account. And that cash account can grow over time. It can earn credit. And that's dependent on on the terms of the policy itself, and it's different from company to company. Typically, it'll increase so much in a given year, and over a long period of time, it really cooks and can be a really good asset over time. And the younger you are, and the sooner you do that, the greater an asset that really will be. I had another question come in on here. What's a good age to buy life insurance? That's a good question too. Typically, the younger the better, but always today. Always today is the best answer I would give. Someone asked, I said, I'll come back to that qualify question. How much insurance can you qualify for? And that's always the question. Because you have to apply for life insurance, that doesn't necessarily mean that you're guaranteed to get approved for a life insurance policy. Typically, the younger you are, the healthier you are. That's going to be the best case scenario for you. It's going to be cheaper. The younger you are, the cheaper it's going to be. That's just typically how it's going to be. So a good age to do it, the sooner the better. And then I had one other question, if there's no more coming in through the chat. The last one I had, oh no, actually I just answered that. It was, why should I get life insurance now? There you go. The sooner the better, the sooner the cheaper. That is all I had. This next slide is disclosures. I'm not going to go over that, but I have to post it at least. And I'm going to leave the slide up here with my information for anybody that needs it or wants to contact me or anything. Feel free to do so. And that was great. All right. Thank you, everybody, for tuning in today. I hope you enjoyed it. Maybe you learned some stuff. Hopefully it cleared up some confusion that you had in life insurance. And I would be more than happy to meet with you, talk with you one-on-one. This is a great, powerful tool in your financial livelihood. So thank you very much. And we will hopefully see each other again. Have a great night, everybody.